Traders, welcome back to our price action trading lesson. We're going to use price action rules to help us predict directional bias of the market and where are the high probability setups. We're looking at S&P 500 M&A futures, and when I'm looking at the structure, I can see that it is a consolidation. We have flat EMA, we have consistent price swings up and down, so this is consolidation, big one. This is not interesting structure that I'm excited to trade, but I have to trade the structure I have in front of me, not the structure I want. So right now, I have to follow the short-term trendline rule because this is the best way how to follow the market while we are in this consolidation. Because every single time I have uptrend working higher or downtrend, you expect retest of the new extreme. So we're correcting to the EMA. We're thinking about some potential long opportunity to test the new high, but nothing formed, and market created a small break, push to new high. Prices keep going higher. So what I can also do is I can measure the one leg and project where the second leg, the target may be. Prices keep working higher, and you can see we exceeded the measured move. So this means that the market is more bullish than initially was anticipated. You have spike up, break a new high, another push up, and we exceeded the measured move. So this is telling me that it is too bullish, and why prices keep going higher so strongly. So this is a good sign that I can start looking for some wider channel, something like this. But this channel is not fully confirmed. We have only one swing, second swing. So not the best channel. I need a bit more confirmation before I'm going to just jump into long opportunities. So mainly still area of development. Let's see what market does. So I'm just open-minded, I'm patient. We're correcting, we're breaking below the EMA. I have to redraw the short-term downtrend, and this is not good. The trend line is not holding at all. We're above EMA and we eventually made new high. Now we have a high low here, but we can't really take it because the signal bar is terrible, bearish bar. Double bar entry is too big. This downtrend doesn't have a new extreme, and also the uptrend wasn't fully confirmed. So I'm mainly patient around this area. I simply can't take it. But even the wider channel has a break in new high. So this is telling me, okay, the uptrend played out, and this is how I'm navigating the price action using the trendline rule. Market is trending lower, so now what I have to do is I never want to have these candles on the chart without a pattern. So once again, I'm going to follow the trendline rule to the downside. The structure overall very unclear. Okay, even though it is sideways consolidation, the key levels are not static. You can see we're breaking higher, we're breaking lower. The key levels are not being respected, so I cannot really randomly buy low, sell high as I would normally do in a healthy trading range. So we're just all over the place. So I'm really just trying to follow price action, following the trendline rule. Let's see what's gonna happen. We have a small break new low already, and prices pushed back above the EMA. I'm gonna redraw a brand new uptrend working higher, something like this. Prices are working lower again. I'm going to redraw the downtrend. You can see I'm not even looking for setups. This is too unclear. Okay, spike down, and we're breaking back above EMA. So now I have to zoom out and I have to remind myself what the structure is. Well, the big structure overall is still consolidation, neutral bias. There is no trending market in either direction. So we have downtrend with the break push to new low, uptrend small break in new high, and a downtrend that has, as you can see, small break push to new extreme. So this is how trendline rule works. Now what's getting my attention is this right here, because I can see we have one leg down, break, second leg down. I can see visual two-legged push down. So this is telling me that the downtrend played out. Because I'm in a consolidation, once something resembles a two-legged push like this, it means there is most likely not going to be a wider channel, and the massive spike above EMA right now is indicating that I can focus on this recent bullish structure. Okay, so pay attention to these big two-legged moves, two legs down, spike above EMA. I have to redraw the downtrend, and now we have interesting setup. We have a new high, first entry long, we triggered above this bar, pull back lower here, we broke below, and we have a second entry long. So this right here is a second entry long, big bullish bar, and the key entry point EMA is holding. So this is first somewhat decent setup. It looks like a one leg down. Downtrend doesn't have fully breaking new extreme. I'm going to mark it a little bit more aggressive because the second entry long bullish bar is so big. You need new high. Can I get a high low confirmation setup? I do. However, we didn't trigger above this bar right here. You can't enter here because this is a bearish bar. So you have to wait for the secondary bar. We've been better had it triggered above this bar. But this right here is a high low confirmation setup. You can see there's also a small key level. Why are we thinking about buying? We explained that the downtrend played out and this uptrend is new high, exactly as you expect every single time following the trendline rule. And this is high probability setup, high-low confirmation setup. It is stronger than the second entry long. You can see because it visually looks like a two-legged pullback. This was a mini second entry long technically, but visually this right here is a visual second entry long, high-low. You need to get new high. Breaking new high created, okay. But once again, I'm going to measure the measured move and I can see that the prices exceeded the measured move and we keep working higher. So what I'm going to do now is I'm going to draw my uptrend a little bit wider like this. Market is correcting. And now your first instinct is to expect a two-legged pullback at the EMA to test the new high. And this is not the wrong way how to think about the structure. But as a trader, you cannot have tunnel vision and you cannot just focus on this individual uptrend. You need to zoom out and think about the overall structure, okay? Because there has to be equilibrium in the market. There has to be push phase and correction phase. And if I'm going to zoom out, this is not a healthy uptrend, okay? In fact, I'm going to use the same logic I used here. I can measure the one leg here, copy it, and I can see that we have almost textbook two legs up. One leg, two-legged pullback down, second leg. So this is a very, very weak uptrend. Almost looks like a trend range, slightly tilted up. So when I'm observing structure like this, where it's two sideways, it's not healthy, consistent series of high highs and high lows for me to just completely forget about selling and just think about longs. When I'm watching this, I would need some extra confirmation at the EMA, preferably high low. Now on this floor, we spiked instantly below EMA. Okay, so I'm not even thinking about buying below EMA, and because the market keeps trending all the way down here, I'm forgetting about new high for this secondary channel because it's the channel for the second leg. Okay, so this is a little bit more nuanced way how to observe price action. Not that easy if you're a novice trader, but basically what I'm trying to do is I'm trying to distinguish, is the structure trending when I'm going to zoom out, or is it sideways? If I'm going to zoom out, it's two sideways, it looks like a broad like a pullback. So I cannot just focus on this uptrend. Remember, there needs to be equilibrium. And if you're just going to focus on this uptrend, market cannot continue working hard indefinitely. So now I'm going to focus on this downtrend because it has a lot of confirmations, consistent series of lower highs and low lows. We retraced too much to expect new high. There was attempt, breaking new high, so attempt is considered enough. We have small overshoot. You have a micro double bottom count reset. Had there been no count reset, I still can't really take second entry short here because it looks like overshoot, nice downtrend with the overshoot. But I was thinking about a lower high confirmation setup that never formed. Okay, new low was made. It's not acting as overshoot, so I'm going to widen my channel. The downtrend is still in play. Okay, the downtrend is still in play. You have a new low, first entry short. I'm thinking about second entry short at the EMA. But you already have almost micro double bottom. You have a second entry short here technically, but I cannot sell right into these lows. Remember, this right here is the low inside the channel and the new low is almost made. There is no room to scalp out, okay? New low, first entry short, already creating double bottom, almost new low. So I can only consider second entry short if it forms much higher. This is way too far down. You can see market created, break a new low and then reversed. You need to have the room. You cannot sell at the bottom of the move. The first entry short generated such a significant push down. That's not a good news. Break a new extreme. So not too many setups so far, but you can see this is what you have to do. Trendline rule is perfect. There are new extremes every single time, apart from this one is the second leg. Break a new extreme. So now I'm pausing, looking to go short, but at the same time, there is no structure. We're two sideways. Why are we not reversing above EMA? So I can't think about buying. This is what I call area of development, where I have to be extra patient because there is no bias, no established trend. Downtrend played out. Uptrend doesn't have new high. You know, we are in no man's land. You know, these areas are tricky and they can chop you to pieces. So just remain patient. I just like waiting for some established structure. In hindsight, I mean, you can argue for fading the breakout here, but you can make the trend line a little bit wider in play. Had there been lower high below EMA here, you can consider, but there was no tick higher, no first entry long, no lower high. So I don't like taking anything. Once again, in hindsight, you have a new low first entry short, a second entry short, which looks good because downtrend played out, you're breaking extreme, you're going sideways, you're in a consolidation. But because all trends played out and the trend range is just about to be established, it's not the easiest structure to trust. I can mark it more aggressive because you're so far from the EMA, great single bar, most breakouts will fail. Prices keep working lower. We draw the downtrend like this. Another overshoot. Initially I was expecting second entry short to test the new low. There's only first entry short. Because we reverse up like this, I'm not even gonna think about selling anymore. There was overshoot. The market reverse all the way back up. You can once again see you had a one leg down, break, second leg down. I'm gonna make it a little bit longer here, something like this to use the entire move. So market moves in pairs of twos, almost perfect measured move. So you have so many to like pullbacks. I have to redraw a brand new uptrend, working higher like this. So when the structure just whipsawing up and down and we have consolidation, I'm very quick to adapt to new trend every single time. So my main focus right now is to think about this uptrend and get a second entry long at the EMA. Okay, prices broke lower. We have a new high for a entry long, so I have to redraw the downtrend. What I would like to see now is, because I followed the trend line rule and I expect new high to be tested, I want to see second entry long at the EMA. I'm going to see second entry long at the EMA. Can we get it? Once again, almost new high. Not technically, so I'm not giving up on the new high yet, but I need to see some decent setup. Far from the EMA inside bar, definitely gonna go long here. I would need to see some smaller bar at the EMA, preferably big tail and small body so I have room to scalp out. It didn't happen. Okay, now I have visual one leg down, break second leg down, so we're not reversing. Okay, these two legs are so broad, it's indicating that we still expect new high, because reversal would be stronger, steeper push down. I have one leg down, break second leg down. Can I get high above EMA? Well, technically I do, but it's double bar entry because the high low triggered above this bar. Of course I cannot go long below EMA above bearish bar, but by the time I get a double bar entry, the scalp is almost made. It's too gigantic. So good context. You expect new high, downtrend played out, bro, two legs down, you're thinking about new high, but it's simply too big. Your stop loss has to go all the way here. Can I get some NFL second entry short? We still don't have a new high yet, so there's still a chance we're going to push higher. But once again, bad signal bar. Inside bar, we don't take inside bars, so just can't take it. If you have some better bar, because tick charts can sometimes vary, you can consider felt second entry short, but in my chart, I can't take it. Break a new high, but prices keep going higher. Well, after breaking new high, we created additional push up. Another push up. So the bullish bias remains strong. That's what I'm noticing. Let's see what's going to happen. Another small push up. Market is correcting. You're breaking new extreme. Now, because we created so many pushes higher after new high, and you can go check high time frame, it looks like there's additional pattern, some wider channel, so we can look for confirmations. And I have two swings right here. Can I get some decent confirmation of the highs? And I can. Confirmations here, here, and here. So it actually fits really, really well. But because this is a secondary channel to our first one, we are anticipating stronger trend to be developed. I want to see some confirmation set up above EMA. I can't really just go long below EMA because I think this is what's going to happen. I want my analysis confirmed. So I want to see prices pushing above EMA and offering me some decent setup. And now we have great high low, new low, first entry short failure. It's above EMA. That's a good sign that the brand new push phase is about to start. This is high low confirmation setup, and this is great high probability setup. High low confirmation setup. Prices keep working higher. New high first entry long. Can I get a second entry long? At this point, we keep working higher so we can trust this bullish trend. So I'm just thinking about playing second entry long at the EMA. You have a second entry long here, but problem is it's not full at the trend line. Yes, you can make it a little bit wider. You can play around with this to make it fit like this. If you're watching this real time, you may not have enough time to tweak it. If you happen to have a channel like this, where the second entry long perfectly confirms your trend line, you can actually consider, because you have two-legged pullback down. If you don't, you need to wait for something like this high-low confirmation setup. So I'm going to mark it a little bit more advanced. You need to have the right trend line in play. Close is sometimes close enough, but if you just have it a little bit wider, unfortunately, you're not with the trend line. So it depends how you have your trend line drawn. If you have it like this, you can go long because the downtrend played out. Second entry long at the bottom of the correction phase can get high low. No, new high. So I'm going to reset the count again. Every single time the new high is exceeded, the latest high I used to count, I have to reset my count in trending market. First entry long. You have a second entry long again, but we can see it visually looks like a one clean push down. You can see the difference between this structure and this. This is clear visual, one leg, break, second leg. Here we have it a little bit different. We have a mini new high first entry long and a massive leg down. So these two moves are different. And for this reason, I'm going to redraw the downtrend like this, and I can't go long here because it looks like a one push down. Yes, it worked, but I don't want to mark trades just because they worked. I want to mark trades in a way you can take them live when you're watching the market real time. So we cannot take it. Market is correcting, so what I'm going to pay attention to is to like a pullback. We have some high, so I'm thinking about first entry long, mini second entry long at the EMA, at the support, multiple test. Because I'm not only looking for new high of the uptrend, I also have small consolidation, which in price action I can combine many rules, not only expecting new high according to channel rule, but also working with this consolidation, buy low, sell high, and fade the breakout. So can I get it? No, we're not at the support, nothing here. Horrible bar, nothing here. You know, this is interesting because this is technically the failed breakout. Failed breakout, strong signal bar, a little bit more advanced, but you can consider because we have the bias on our side, we traded up. So you're combining the trend range rule, fading the breakout, but you have your bias on your side. So it's much stronger setup to be fading with the direction of the main trend rather than fading at the top. You don't want to sell because you traded up. Can I get a high-low confirmation setup to be safe? No high-low confirmation setup. There is no one tick below. There is no first entry short. So unfortunately, no high-low confirmation setup. It's a shame because there would have been a great high-low confirmation of failed breakout. You need to get new high, break a new high, and market keeps creating new high again. Can we reverse now, or we're going to push above EMA? And this push above EMA right here forced me to once again ask myself, why after breaking new high, there is push up, there is no reversal, and there is push up again. So this is a good sign that the angle of the channel is a little bit different, and I can look for a slightly wider channel like this. It still fits really well here. Two swings here, swing here, almost swing here, fits perfectly off the highs. So the trend is a little bit stronger. I'm going to use a little bit wider channel, but at this point it is starting to get too late. The market is about to close, breaking new high. So this is the overall structure for today. I'm going to zoom out. So as you can see, we started with consolidation. So look for the trend lines, look for two-legged moves. Once there's a broad break and something resembles a two-legged push, you can expect depletion and you have to adapt quickly once there is a reversal. So pretty straightforward, and this was a good price action because we started with nice uptrend and eventually we had broader uptrend working higher. So there were a few good opportunities. If you have better bars on some of these setups, you can definitely mark even those setups, but most of the time I today didn't have the best signal bar. Either way, I hope you had a good training. I'm going to wrap it up. I'm going to talk to you next time. Good luck in your trading.